So I have a few questions from Michael. The first one is that do we have smaller macros? Like I have noticed uh, the macros you have told 10 minutes top of the hour and 10 minutes like the standard 20-minute macros. Apart from that, I have noticed that market has these sudden fluctuations. 5 minutes, like the time is 10:30, so 10:25 to 10:35. This is a smaller macro I have seen perform really well in these markets over. I have noticed it for the last 1 or 2 months. And is this such a thing? Am I doing in the right direction? Am I going in the right direction? I want to ask this question.
First and foremost, that's not a macro. Macros are 20-minute intervals, last 10 minutes at the top of the hour, first 10 minutes of the new hour, and the macros that are in the last final hour of regular trading hours. So there's four of them in that last hour. But what you're describing, you're just seeing the effects of the first hour's dealing range. So from 9:30 to 10:30, things start getting animated because there's a lot of algorithmic models that are used institutionally that demand that there be a first hour of trading before they do anything. And that's why when you see these people talk about orbs, like opening range breakout, some of them are 5 minutes, some of them are 15 minutes. It's laughable. You can make money. I'm not saying you can't make money, but you're so close to the trees, you can't see the forest. So the algorithm runs on the first 30 minutes. That's just the bottom line. But then you have the first hour's dealing range. So what you described was from 10:30, 10:35, you're seeing this little flurry of activity. It's because they're generating liquidity and exchanging of orders because of that fact that first hour has now been booked. So now you're seeing the first 5 minutes after first hour's trading. So no, it's not a macro. It's just there's an increased participation, and that fluctuation is going to reflect that because they know there's a flood of. Just study on your own. Everybody that's listening to it, just see how much of an interest. Maybe it's a price run that's already going. It's a little bit of a flurry of continuation there, or if it's a short-term little low, it'll create a little flurry. It'll pull back into the range a little bit. It's only because there's more activity coming in, and it's after the first hour's dealing range completes at 10:30 Eastern time.
Well, I was thinking these things happen in a London session as well, like 325 to 335, 425 to 435, and these work well in uh, pre-market session like 725 to 735. There is a flurry of a sudden price movement, just like we see in the macro, but on a smaller scale than those 20-minute intervals.
I'm going to say it again. That's not a macro. You're just seeing an increased volatility. I promise you, I'm not hiding it from you. There's no other macros.
Thank you, sir. And I have another question as well. Like uh, a few weeks ago, you taught us about the grids, time grid and price grid. So my question is that do we grade the 24-hour periods into quadrants as well, quadrants or octants, so that we have a proper matrix type? Is it something that you do divide the time into quadrants as well?
The full daily ranges?
Yes, sir. Daily range or weekly range
Absolutely.
divided it into.
Absolutely, I do. Yes, absolutely. One of the things I taught behind the paywall, and Pippi Banks, if he's here, he'll tell you he heard me teaching it there too. If we're bearish, okay, and the market's really bearish and it really wants to continuously go lower, if you look for today's selling, okay, your best sells are going to form in the lower half of yesterday's range. So how would you determine that if you aren't grading yesterday's high and low? So what are you doing there? Same logic today. It's not me reinventing new stuff. Behind the paywall, I taught charter members and paid members as they were going through the motions of learning from the paid side of it. The support of the upper half when you're bullish and the resistance of the lower half when you're bearish. Same element just being applied to the full daily range. That's a fractal mentality. It's a very specific mechanism that you're applying to specific ranges. When you apply it to time, you'll be able to determine, okay, what's the range inside of this time window I'm looking at? It's the discernible, clear little period that makes a nice little trending movement. Everything else around it is irrelevant. You're looking for that little clear cut piece. Well, what is a daily range? It's a clear cut piece of price action. It's a very discernible high and low of a range. So, yes, I absolutely do that for the weekly chart. I absolutely do it for a daily chart. I do it for the last 3 days. Oops.
I don't think I could frame the question correctly. Yes, I understand about the quadrants and octants that you measure ranges of price, but I am talking about the ranges of time. Like we have 24 hours in a day. Do we divide it into octants and use this like it would be a 3 hour intervals? And what specifically happens at that time? Like we start, it would be
Yeah,
6
yeah.
p.m.
I know what you're
9.
saying. It's almost like you're trying to do Fibonacci on time. I don't do anything with that. I have no, nothing. I don't do anything with that now. As far as time, I literally placed everything in your hands that I'm going to as it relates to time. There's very specific little windows of opportunity. You just look for the defined range that forms in there and then grade that out. You will see all the nice price runs, unless it's manual intervention. Price runs will run off of those types of things I'm teaching. Very rarely will you find something that surprises you because it's going to use this information. It's going to use these key PD arrays that you can see that are graded out based on a dealing range that either is going to continue once it trades back up into it or down into it, or it will reverse once it leaves it and comes back in and treats it as an inversion aspect. So I don't have anything that I'm secretly hiding or even implementing. I don't even believe in Fibonacci on time. Like I don't believe in it because, frankly, if I could do it, I'd be in a lot of trouble because I'd be arm wrestling God, saying I don't want to teach that because to me that would be absolutely like perfect knowing the future. Then I spent a lot of time investing in things and trying to pursue that in prayer, in testing things and doing this and doing that. I never found anything that was consistent with it in regards to implementing a very specific measurement, projecting time. Larry Williams has a book. I think everybody should have it in their library. How I Made $1 Million Trading Commodities Last Year, and there's a little paragraph section in that book, and he calls it his 1.28 formula. And I didn't know about it from the book. I learned about it first from his 4-tape VHS series, and he talked about it. And of course, now, mind you, I'm 20 years old. I'm very impressionable. I'm looking up to this guy because he did something nobody else had done, and I'm like, he's real. Like he's real. He did it. So he sits there on this overhead projector in this little video course. He says, "Okay, this is something that I like to use, and what you want to do is you want to take the highest high over here and the next high, and then find a low in here, and then measure how many count the days or the bars between it, multiply it by 1.28, and project it from the low in between." And usually you'll get some kind of a turnaround right there. Or sometimes if it's a trending move, it'll really start to accelerate there. And in my mind, as a 20-year-old, I heard this guy knows how to predict the next high and the low. And I believed it because he said so. So I understand when people, I'm going to say this, and it's not because I want it, but they literally worship the ICT persona because they think I'm God down here, and I'm not. I had that same feeling towards Larry Williams. Like this guy had things I didn't even think was possible, and I put all kinds of, I guess, belief and faith in this 1.28 because I was like, he's showing examples of it. Look, it's calling the very candlestick. Like, come on, man! Like this is it. I can't believe I only paid $300 or less to get these 4 days. I can't believe it. And then I tried to trade it with copper, and man, I don't know what happened. It's like they said, oh, today it no longer works because it raged against me and I got hurt. So then I tried it again in another grain market, got hurt. I was like, okay, I can't touch it. So I played around with it, in back testing and stuff, and discovered that it wasn't as sound. And I learned my lesson. I didn't back test it enough to see it's not that great of a thing. But packaging something, making it sound wonderful is altogether something different until you put it in your own hands. So that was my first foray with the elements of time and like projecting things in the future and all this other stuff. It sounds wonderful. It sounds really neat and mystical. And I bought into it. I was like, this is really cool. Sometimes it works and sometimes it didn't. And I had some things that I coded. And when I had Supercharts, which is an old platform, and then TradeStation, when I was using Easy Language there, I put some things in there. It would kind of like overlap other things I had. And sometimes it would be like one or two candles away from the thing I'm trying to aim for a long or a short. But it was so infrequent. It's laughable to even consider being used. So I don't like the Fibonacci element of time. There's wonderful things that we can talk about in hindsight and show, and there's books written out there, and they try to sell the idea. But why aren't these people just not writing books anymore? Like, why aren't they just being rich? Because if they know the future and they know when it's going to do that, like you figured out the only piece that I could never figure out. That's what everybody wants to know. When is the actual candle to get in? Because wouldn't that answer everything? Because I'm telling you what range to focus on, what level it's going to create the thing on. So now, if you can figure out the actual time, then that's it. We're all billionaires. We're all putting welfare checks, in Elon's pockets now because he can't keep up with us. That's what it's going to be like. But obviously, the reality is that it can't be like that at all. Nobody knows that. Nobody knows that. So I learned the hard way. I lost lots of money trying to do things with projections and Fibonacci with time, and I found that the business operates on business hours. There's certain windows of opportunity. They make concession for London traders. They make concession for Asian traders. They make concession for AM New York traders. They make concession for people during the lunch hours. They make concession for the PM session, and that's it. That's all you get to worry about. There's nothing else about time that you need to worry about. They bring in the macros, and you got it. It's on lockdown now. But you have to know where it's going, and you have to know what price. And then that's the part that a little bit of skill requires. There it is. You don't need all this other, pseudoscience of Fibonacci on time. I don't break anything down with time except for what I taught you. It's look inside this little window. When price gives you a range, just map that out, project it forward, and wait for price to utilize it. And then if you got the draw right, you got a winning trade.
Thank you so much, Michael. I have two more questions if I'm allowed to ask.
Let's go with one because I only have a little bit of time left. I want to see if anybody else has something else.
Okay, sir. So the things you have taught about power of three AMD, we divide the price run into three categories: accumulation, manipulation, and distribution. And but when we grade ranges, we divide it into four, like quadrants or octants. So I was asked, my question is that why didn't we, or why did you not go with three? Or I certainly know there is a benefit of four, but and eight. But this question was in my mind, like why didn't we go with three? Because there are three stages of any price run.
You have to define something in terms of equilibrium. So where there's equilibrium, you have to define where premium to discount is going to be, what range that's going to be, and then this mystical that doesn't really exist algorithm has to be able to map out very specific price levels that it would refer back to. So the easiest way to do that is in grading it for quadrants, eighths, sixteenths, 30 seconds, so on forth. If the range permits that, if it's a usable range, you can define it down to that low. But just thirds is just a simple, it was me giving you how I arrived at this information. It starts in the earliest journal. Everything I'm teaching, we're in the latter portions of my journals. So it starts very infantile in the beginning. But then we start getting a little bit more information. And I learned more things and more refinement, more refinement, more refinement. So if you look at old stuff, it's not recognizable. But it's just a graduated movement from where I knew nothing and going through the early stages of seeing things working, being able to adopt certain ideas and mindsets and approaches and concepts. And then we're at now. And there's a little bit more things we'll get through in the next 2 years, and then we're done.
Thank you so much, Michael. And that would be all.